long before dollars, there was gold. Gold built empires, drove men across oceans, and sent others deep underground in search of fortune.
Not just silver, they have platinum, they have palladium, other than gold. The price has risen quite steeply.
Now, why are investors turning once again to the oldest asset on Earth? Coming up on Decimal Point. Everything we touch turns to gold. And over the past year, many truly have, as prices of gold and silver surged about 50% as of October 2025. In uncertain economic times, investors turn to gold as their safe haven. And this time, silver is shining too. We'll hear from one of Malaysia's leading economists and how traders and everyday investors are saying, in gold, we trust. Just to start here, let's go back to the very basics, the fundamentals. In an age where we've got digital currencies and complex financial products, we've got Bitcoin and all sorts, why are people still going back to ancient assets like gold and silver, for example?
That's an interesting question. I think it boils down to the value of that particular commodities. If you talk about cryptocurrencies, I think the selling points is the system, the blockchain technology is very robust and whatnot. That's the main selling points lah. And of course, there's a lot of offering in terms of cryptocurrencies. You have Bitcoin lah, Ethereums, and the excitements along the way that comes with it in terms of the volatility. So that also can draw people into that particular asset class. But in the case of gold, I think it's kind of a conventional wisdom that gold has its own value, and it is largely being used in jewelry, and not to mention it is also being used in the technology sector, especially for electronics. And of course now the investing community also has been very creative in terms of coming up with the structure to invest in gold. So there's a lot of convoluting factors that comes into play that makes gold becomes more attractive, especially in the current context where people are quite concerned about the value of US dollar going forward. If you trace the history where the Bretton Woods, the US dollar is being pegged against a unit of a gold. So therefore, there's historical elements to it, and concerns over economic policies in the US especially, how that translates into the value of US dollar. So I think there's a lot of factors that determine and attract investors to invest in gold. Yeah.
Are you aware of any religious, cultural, or racial preferences for investing in gold and like precious metals, anything like that?
I know in Islam, of course, we consider gold is something that is very precious. It is being mentioned in the hadith. Within Islamic context, it is being associated something that is it has an intrinsic value. So it's very prominent within Islamic community in terms of how they treat gold as a valuable asset.
Very interesting insight for that, Doctor. So with talk of inflation, potential recessions and geopolitical uncertainty, why is there a sudden resurgence in interest in precious metals, particularly for countries like India and China right now?
Sure. I think I would say it stems from concerns about the value of US dollar. The phenomenon called de-dollarizations has been, we've been hearing this for many years already, and now with Trump helming the US country, we can see there's a lot of debate and concerns about how the tariff might impact the economy. And there are other policies as well. And true enough, from the credit rating agencies, I mean, in the recent months, we saw Moody's rating have actually downgraded US government sovereign rating by 1 notch from AAA to AA1. So as it is now, the US government has no longer command a AAA rating country since 2011. S&P started it in 2011 when there was a lot of debate over fiscal cliff back then. So they cut the sovereign rating for the US government. And then in 2023, Fitch rating did the same thing, and now Moody's. So we are looking at the big 3 CRAs, the credit rating agencies, S&P, Fitch, and also Moody's, are no longer calling them as a AAA country. So I think all this will lead to the next question: what will be the next safe haven instrument? Since already we are so accustomed to US dollar being the safe haven, so people are looking for alternatives. And gold obviously is one of the main candidate, and the other perhaps within the crypto currency space. And that's the reason why I think why the central bank is also now accumulating more gold in the past 10 years. If you look at the compound annual growth rates, CAGR, from 2010 up until 2024, the demand for gold from the central bank globally has risen about 20% per annum.
My next question is, what are the core differences between investing in gold and silver? Are they the same asset class with different prices, or do they serve different purposes in a portfolio?
Gold and silver belongs to the same family. It's a precious metal, but how it behaves and in terms of the volatility, of course, I would say it's different. Gold receives a lot of attention and people are so accustomed to it, but silver, I suppose more and more people become more attuned to it, because again it's about looking for a better alternatives, because gold obviously is very expensive these days, and to a large degree we can say there's a bubble in the making. So naturally, traders, investors would look for other alternatives within the same space, within the precious metal. We have not just silver, we have platinum, we have palladium. So these are the possible alternatives other than gold, because the price has risen quite steeply. Every now and then we keep hearing about gold prices breaking the all-time high records. So yeah, people are looking for alternatives. We have seen gold prices for this year, they have hit an all-time high multiple times, and that gives the impression that there could be at some point prices of gold could actually correct, and it did experience the corrections.
In 1944, the Bretton Woods Conference reshaped the global financial system, pegging the US dollar to gold at $35 an ounce and other currencies to the dollar. But in 1971, President Richard Nixon ended the link to gold. From then on, money became fiat currency, valued by trust in the government and its economy, instead of metal. Okay, so Doctor, what are the biggest misconceptions or drawbacks that new investors need to be aware of when investing in precious metals or gold in particular?
I think the main misconception perhaps is the desire to make a quick wins. They expect to incur or be able to reap big rewards in very short time. I think that's a classic mistake perhaps. But in reality, that is something that you need to be, you need to be patient, obviously, and look at where are the current market conditions at the moment. For instance, gold prices, I think the previous peak was around 4,356 per ounce US dollar. That's the all-time high, and we have seen a number of times spot gold prices continuing to reach all-time high. So you know already, at some point it will break, at some point prices will correct, and it did recently, where the spot gold prices have corrected more than 7%. And typically, rule of thumb, when we say correction, is what, 10%? So if you're looking at 10% corrections, probably we are looking around 3,900 pounds in terms of spot gold prices. So therefore, the misconception is that the desire for a quick wins, especially when they chase prices of the investment instrument that already climbing, that's already reaching the all-time high.
Okay, so just to clarify, are you saying that for people that invest in precious metals or gold, they need to play the long game rather than the short game?
Yes, exactly. I mean, you need to look at your investment horizon, obviously. I mean, if you ideally should be around probably around 3 years horizons, in order to really be able to reap the benefits and be able to recoup some of your cost of investments, because along the way there will be corrections, as I mentioned, and this will dictate the amount of investment returns that you'll be getting back at the end of the day. Yeah.
However, in saying that, I think that people who made the investment maybe the last 2 years would have reaped a lot more in the past, in the recent.
Exactly. Then there's this mentality of to delay the decisions to sell. So then it goes back to your investment objectives. So ideally you need to set your objectives much earlier. So once you reach that objective, the price level that you desire, then the right decision is to liquidate and wait for an opportunity to come back. But of course, this is financial disciplines, easy said than done, but it's something that needs to be done.
So all this ties in with emotion and obviously exactly. The investor's dilemma of emotions versus thinking with your heart versus your head, right?
Yes.
Okay, Dr. Nizam, let's be frank. Gold as an asset class doesn't give any dividends or continuous income. Does this detract from its attractiveness compared to other assets in the long term?
I don't think necessarily so. I think the main euphoria or the excitement or the adrenaline rush that comes to it is actually the potential capital gains that comes with it, and therefore market timings matters most. But of course, beyond that, one needs to be cognizant about the current market conditions. For instance, now we have seen gold prices for this year, they have hit an all-time high multiple times, and that gives the impression that there could be at some point prices of gold could actually correct, and it did experience the corrections, but at the same time they need to be aware about the potential risk of market correction. These are very much same principles in other investing or any asset class, be it stock markets, bond prices, exchange rates. So the traders or the investors need to be aware of the signals here.
Okay, but we are talking in the sense, my question just now was talking about more mom and dad investors who are not the most sophisticated investors out there.
Sure.
So there might be new first-time investors entering the gold market because of all the hype. Sure. So do you think that they are aware of these kind of changes in the market?
The common question that I got, how high gold prices could go up. So I think my impression is that people are expecting whether gold prices will continue to remain in a bullish mode. So again, I guess it's about the question of market timing, which we need to educate our investors that investment or asset class prices tend to correct over time. So this is the fact that we need to acknowledge and be mindful about the potential risks associating with that.
Okay, you have a very central theme about risk involved with investment in gold or precious metals. So has there ever been a crash that you can recall in recent history, especially involving gold?
Right. I can't recall gold prices has actually corrected, at least since 2000. I mean, since 2000, we saw a major episode like the dot-com bubble burst in 2001. We saw the US subprime crisis in 2007, 2008, and 2009. Of course, there was a concern over the European government debt crisis in mid-2011, 2012. Then there's COVID. we continue to see the rise of gold prices over time. So we have yet to see any meaningful corrections or pullback in terms of gold prices for now. Yeah, because there's history between US dollar and gold prices. And now we are concerned about the prospect of US economy and how that's translated into US dollar. So all this will play out in terms of how it will dictate the gold prices going forward. So on that note, there is a strong case for gold prices to climb further, but again, we need to be mindful about the potential correction along the way.
So there have been people who have compared like gold to digital assets like Bitcoin, cryptocurrency, because there's a limited supply, just like gold. There's a limited finite supply of it in the world. Yeah, what's your opinion on this kind of comparison?
Well, definitely it's not apple to apple comparisons, because gold, it has fundamental value attached to it. You have jewelry, you have electronic sector, and of course the investment demand. Cryptocurrencies leverage on blockchain system, and basically it works based on good faith, confidence that the blockchain system will be the main driver, and of course along the way there's a limitation in terms of supply, for instance like Bitcoin. So I think we are looking a different type of asset class, and therefore a different type of risk and reward profile.
So in your own words, it's not comparable at all?
No, it's different asset class, it's different risk profile, but ultimately it boils down to the individual. What is it that they want to achieve at the end of the day in terms of investment returns?
So, Doctor, as you have alluded to several times during this interview, the price of precious metals can go up and down. It's quite volatile. So, how can investors prepare mentally and financially to cope with this level of volatility?
Knowledge is key, and therefore it requires a lot of reading. I mean, when I say reading, it has to be the right stuff. There's a lot of investment gurus out there, so as an investor, as an individual, they need to filter that out to ensure that whatever informations are genuine in terms of the knowledge. And of course, with knowledge, then it creates the awareness, it creates perhaps the discipline. So that would, ease the uncertainties with respect to investment decisions. I think when it comes to gold prices, when it comes to discipline in terms of understanding the nature of the volatility, I would imagine understanding the charting ability or the technical analysis is very key, because you are looking at solely on the price movement. So you need to understand whether the current market situation is already in an overbought conditions or oversold conditions.
I see.
So it's somewhat technical, but technical analysis will help you and will guide you in terms of the entry points for you to come in, and the exit point in terms of the selling.
So practically, you should say that investors need to study. And what would your top sources be for learning this?
Okay, as someone who is practicing economist, we have the luxury of using Bloomberg Terminal. But now, I think with all technology that we have now in terms of apps, there's a lot of apps that is available that is can be used among our investors. Such as TradingView, they have all this, but I think there's subscription to that lah, where investors and traders need to pay, and from there you can learn how to chart and to see and to read the markets. Yeah, you can buy the physical gold, at the same time you can buy a gold in unit form, which can be recorded in the accounts.
Back in 19th century Malaya, under British rule, money wasn't paper, it was metal. People traded with silver, copper and bronze coins in the Strait settlements. British trade dollars used across Asia were also made of silver. Okay, so this is more practical question. For those investors who are interested in this space, what are the physical methods to invest? So, for example, buying bullion, ETFs, or stocks?
Sure. I think these days we can see a lot of banking institutions in Malaysia have started to offer gold investments, and therefore I think the general public can actually browse through their websites, and even if they plan to go and visit to the respective branch, they can do so. And I would like, to make that suggestion because, banking institution is highly supervised, highly regulated by the Central Bank of Malaysia, Bank Negara of Malaysia, and therefore it should instill some form of confidence, public confidence, because all these monies will be regulated, and rest assured there's no scams or whatsoever, so that should give you some degree of assurance that this product are legitimate.
You were mentioning about scams. In the recent years, there's been several companies who have suddenly appeared, especially online. They have very convincing fronts, they use good public figures to fund their organizations, and they appear very convincing to the general public. They also have very attractive schemes where they offer leverage and stuff. What are your opinions on that?
Yeah, I guess this is the main challenge of the current technology, where social media has become so prevalent in terms of promoting just any products that include investments. And this is where I think the general public needs to be careful when considering any potential investment proposals. And in this regards, I think perhaps the best bet is obviously to fall back into something basics. Maybe you can just look at the bank's websites, because I think a lot of banks these days, they have been offering quite reasonable or respectable investment products. And as you know, banking institutions that include Islamic banking institutions just like us, Bank Muhammad Malaysia Berhad, it is highly regulated, highly supervised by the Bank Negara of Malaysia. Because I think every banks, whenever they want to launch any new products, they need to get approval for Bank Negara. So on that note, they need to do some user acceptance tests and whatnot. So the process are very robust before they can roll out any investment product.
Okay, in terms of the practical aspect of it, holding ETFs or holding physical gold, does anyone have better peace of mind, offer peace of mind to the investor?
I think it's a matter of choice, and of course it's a matter of risk tolerance and their investment horizons. So each and every one of us have a different investment horizon. Each factor is also another factor to look at. Usually, the younger you are, you tend to have more risk appetite as opposed to those who are nearing to their retirements. So all this play into the factors that can shape up the investment decisions. So as mentioned, the product offering is wide ranging. It's up to the individuals to decide and make their own due diligence.
So in conclusion, we can summarize that if you buy gold through banks and institutions like that, you can actually have the physical gold and you can come to the bank and inspect it. You can also buy physical gold and keep it in the bank. Is that correct?
What I understand, you can buy the physical gold. At the same time, you can buy a gold in unit form, which can be recorded in the accounts. So the choice is up to the investors. But as mentioned, banking institutions are highly regulated. It is licensed by the Bank Negara of Malaysia. So I think the confidence is there. I mean, if anything happens, they can always go to the respective authorities such as Bank Negara to make their complaints, and hopefully any disparities or dispute can be resolved amicably.
Okay, let's go on to the more sophisticated investors out there who have a bigger, higher risk appetite, and therefore, they want to invest, let's say, in mining companies. Is that better compared to investing in gold directly?
Well, I guess in our context in Malaysia, there are listed gold companies where their business is selling jewelry. I cannot name the companies, but you can check it out. But this could be another vehicle for investors to look at in terms of investing in the gold space. One, as you mentioned, investing in a direct asset class. The other will be indirect companies who business involved in gold business. It also can be a proxy for their exposure in these particular markets.
Okay, since we are talking about precious metals today, can you name several precious metals which you have your eye on or you think are rising in future and have potential?
Right. I did some observation on key precious metals. Of course, gold is one of them. I've noticed other precious metals like silver and platinum is making their inroads in terms of making headlines, lah, so to speak. You can see their year-to-date performance has been quite decent.
Okay, so as a quick summary to users out there or investors, potential investors out there, possibly people who have never invested in precious metals, would you recommend, what are your recommendations? Would you just stick to the fundamental two or?
Okay, I think as the old saying, never put your basket into
You put all your eggs.
your eggs into one basket. You need to diversify. That old adage is applicable throughout the years, throughout the era. So on that note, you need to diversify your investment. Just look at big institutions like EPF. They have equities, they have fixed income, they have alternative assets. So I think the same principle can be replicated at individual level. So I think, as mentioned, every age class will have different risk appetite. And typically, the older you are, you tend to go for something that is more certain. Fixed income is one of them. And I think to have a little bit exposure in gold, it may not be do harm, since we know and we can agree on that there's a prospect of higher gold prices going forward. Yeah.
We're seeing a renewed interest in precious metals, from gold bars and jewelry to digital gold and ETFs. These investments are now more accessible than ever. But remember, all that glitters is not gold. Before you sign up for any gold investments, make sure it's legitimate and understand the risks. For investments that matter, it's Decimal Point.